Cool. So let's start with these market recap. We're gonna go over the trade that we took this morning with gold. We end up taking 4 trades. I'm gonna break down each and one of them. So I'm gonna give you guys first thing first, the levels that I marked up, exactly why did I mark them up and why did I look for trades around these areas, right? So let's start off first on the daily time frame where we always start from. So if we look at the overall market condition, what do you guys see? Obviously, we're in a very strong bullish market, right? Just simply breaking above all of these entire key levels, respecting all of these entire key levels off the daily time frame. We go up here to the 4 hour time frame. We just pretty much look exactly what market action did yesterday during the session that we were trading, right? Which was yesterday, New York. Yeah, it was New York. Late Asian session is when it hit our final take profits. But we went over the New York session trade, which was yesterday. And then during the Asian session, we did have a very strong bullish candle, literally just spiking towards the upside, creating a new all-time highs, which price action at the moment is getting into that area again. So the all-time highs was formed around the 3507, right? So this was during the Asian session, which obviously price action had a nice spike towards the upside. Now during the late or early London session, obviously we did get a retracement back towards the downside. Now look exactly at the level that price action had the retracement from. We came back to retest all of these exact demand zones. This demand zone is going to be marked up around the 34.76, which during the London session, we did see the price session had the swept towards the downside. We respected all of these entire demand zone. So the demand zone that we have marked up here is going to be around the 34.76, and we can also have marked up over here, which is going to be around the 34.74. So this is going to be the two zones that price session was having a bullish reaction from yesterday, right? So keep this in note. We're going to write down the notes here so you guys can have an idea. Let me make sure everything is good. All right. So the first note, obviously all-time highs, or we can see price is overall bullish, right? So that's number one thing. That's one thing that we need to keep in mind. Price is overall bullish. Two, we have seen the price action has pulled back towards this exact demand zone. Demand zone from an intraday time frame structure, which is going to be around the 34.76 to the 34.74. So pullback, we can put pullback slash reaction of demand or intraday. Let me just move this mic here so it doesn't like mess up the audios and anything. So rejection of intraday structure, we have 34.76 and we also have 34.74. So those are the two zones that I had marked up this morning. So right after the London session, we did see a pullback towards the zigzag demand zone. Notice the bullish reaction that price action started having. Right now, let me go back into the 15-minute time frame, which you guys can see a little bit better. Look at this trade here. I'm kind of annoyed with this one because we got stopped out of break even and literally just flew 100 pips. That's insane. All right. But check this out. So we have the demand zone. If you guys take a look at the left side, same thing happened during the New York session from yesterday. And yesterday, we did see that price action had a break. This is where price action started forming that demand zone. We started bouncing from one point towards another point, right? So another way to say this is going to be an area of support until we finally got the full break towards it during the Asian session. Asian session left all of these entire orders not being filled. Right, so again, how demand supply works is simply orders that buyers or sellers are being placed. So for example, let's say in this demand zone over here, 80% of buyers started buying the market around this zone, right, but leaving 20% orders not filled. And that's exactly what price action did here during the London session. London session, we got a pullback towards this exact demand zone, filled up that other 20%, and then price action started having to push towards this upside, right? So this key level over here, the 34.76 and 34.74 was my main areas of interest, the main areas of interest of the day. So check this out. If we're going to focus here on the 15-minute time frame, right, notice here during the early New York session, right, this was 7 a.m. This was during the pre-New York session. London session, we came back, we swept out this demand zone, we started trading above these areas of interest, which is a great sign already. Now, what do we look for whenever price action comes into one areas of interest and we start having a reaction from it? The first thing first that we always look for is for a break of structure or a switch of structure, right? Which is going to give us a confirmation telling us, hey, price is now ready to start heading towards the upside or towards the downside, whatever side you guys are looking for, right? Now, the reason why we never buy right away just because price action is having a reaction from it is simply because of this entire move, right? So it's very basic logic. If price action is here creating higher highs and higher lows, we come back here and then start creating new lower lows and lower highs, what are the chances of price action disrespecting these zones, coming over here and then start having to shift the structure? obviously it's always going to be a 50%, right? Trading is always going to be a probability of 50%. The right way to execute the market is always waiting for those confirmations, right? The confirmation that you guys are always going to be looking for to be taking those type of setups. So in this case, we did see that price action was in a bearish market. This was like short-term bearish market during the London session, coming into a higher time frame intraday structure demand zone, 34.76, 34.74. Look what happens during the London session. We swept out all of these entire demand zone. You guys see that? And then after that, price action has the break. This was the previous lower high, or the previous high that price action has made over here. So we have broken out of that entire previous lower high. You guys can see that. So let me put this another color. Let's put this orange. We're gonna go down into the 5-minute time frame. So check this out. We have highs here, we have lows here, lower highs, lower lows, and lower highs. Price action starts respecting these lows. We swept out of all of these entire previous lows from the London session. Price action started creating equal lows over here, breaks above it, forms a new high. What comes up after next? It creates a new higher low. Very simple. That right here was our entry confirmation. So this was a very simple trade. This was the first trade that we took this morning, which we ended up taking this at 7:30 in the morning. So very early. Had this all marked up at 7 in the morning. So we took this entry 30 minutes before the market, 30 minutes before and 30 minutes after the New York session, right? So check this out. We come back towards these levels. Very simple. We respected London lows. We broke out of this structure. Price action comes back, forms a new higher low. Very simple. We enter the market once we did close a bullish candle here. If we look at it from a 15-minute time frame perspective, you guys can also see how that last 5-minute candle also closed as a bullish engulfing candle. Very simple. So we go back here to the 5-minute time frame. Notice how we start having a nice push towards these upside. This right here was the nice move that we wanted. This one straight into profit, which did over 140 pips to a 1-2 risk to reward. Now, remember how I told you guys that we never react right away off a proper, just because price action is coming towards demand or towards the supply. Look what price action left right over here. This structure over here that happened during the London session, early London session, we left an area of supply, which is going to be around the 34.93 zone, right? So this is another area of supply, also a broken structure. So again, we went from creating a bullish structure, creating higher highs and higher lows, to creating this new low, lower high, and then breaking towards the downside. So during the New York session, once we respected all of these entire lows from right over here, right, we started having the push towards these upside. Once again, price action coming towards the supply. These broken structure over here, which obviously it's very simple or very logic, support and resistance, right? We broke under the support, price action comes back, use it as resistance, right? But again, we never react off in first move. So this move over here, obviously we did see a bearish move. This was during the New York session open, which happened at 8 a.m. We did see a bearish move, right? Now this is where I took my second entry. The second entry I took, it was called out as a buy limit, was taken above these entire levels. So again, I was trading off broken structure. So we broke the first key level, which price action respected it. Simply all I waited for the second entry was for price action to break out of this level. But again, this is the zone that kind of gave us a little messed up. It did happen during the New York session. So this zone over here, I will agree that this setup over here was very impulsive due to the fact that obviously we came back towards these broken structure and area supply. Price action perfectly respected it. So again, we never broke above it, we respected it. This was pretty much the zone that I had marked up. So obviously the idea here was just simply go along with the trend. So again, if we're creating these new highs, lows, higher lows, higher highs, we broke out of this structure. Obviously the idea will be for price action to give us a pullback towards these levels to start maintaining itself above so that we can buy the market. That's exactly what we did. The first try, we did come out of the market very early due to the fact that there was a lot of volatility, right? So I did not want to be stuck in this volatility. This is where I told you guys, hey, close out this at negative 20 pips. So what we simply waited for, we simply waited for the 15-minute candle to close above these areas of interest. Oh, my bad. The 5-minute candle is what I waited for. I waited for this 5-minute candle to close above these areas of interest and for a bullish candle to close back above, which was this candle. That was a fake out. We got entered the market. The market did close above it, but then faked out and broke back towards the downside. So this is where we took our loss. So this was the first trade. We got a 1-2. This over here was the second trade, which we end up taking a loss. Again, the loss was just simply taken off an impulse, breaking retest above all of these entire structure. So this is where I told you guys, hey, I'm going to step out for a little bit. We're going to wait to see how price action reacts in our areas of interest, right? The areas of interest that I had marked up again here is going to be the 34.76, the 34.74. So we're going back towards what happened during the London session, what happened during the New York session. So this over here is going to be considered as the New York session lows, the 34.75 zones, right? So once again, once we respected the supply zone over here from the London session, which price action had a short-term bearish move, coming back towards these major demand zone over here, which price action had a reaction from it, right? So once again, once price action came back towards this level, what did we see? We did see that price action obviously maintained itself above it. So going back towards the 5-minute time frame, the 5-minute time frame, all we're simply going to be looking for is for those inverse gap. Those inverse gaps is going to be our areas of interest, right? So for example, we have the demand zone over here, which price action had a bullish reaction from it. Starts pushing back towards the upside. But again, we're not going to buy the market right away. We need the extra confirmation. The extra confirmation for us here was that inverse. That inverse is going to be selected around the 34.80 zone. So check this out. Bearish market, short-term bearish, respected major demand, and then has a break and closure above this inverse. So the inverse starts from right over here. From this point towards this point over here. Notice how this bullish candle, right? This is a inverse fair value gap. Notice how this one over here broke above it. We got the retest of this fair value gap over here. Notice how we respected it perfectly. All we simply waited for was for a candle to close above bullish, which is going to be this candle over here. This is where I told you guys, hey, I'm going to buy the market once again. This was honestly a very stressful trade due to the fact that price action was just ranging up and down. I did like the setup because, again, we respected this demand. We inversed this entire gap over here. We retested. We closed above it. But price action was having very low volatility. And the other thing that kind of turned me off in this trade over here was that price action was still trading underneath these entire London highs, the 34.86 zone. So notice how we rejected it once here. Price action broke above it. We rejected it here. And we also rejected it over here. The only thing that saved me was that price action was still trading and maintaining itself above this inverse. If this inverse over here would have just simply broken out of it and closed underneath, then this is where I would have told you guys, hey, we're going to close out this trade early because this trade is no longer valid. But what happens next? We start having the nice push towards this upside. That's exactly where we end up hitting our take profit 3, which we did play up, or take profit 4. We did end up playing out for 100 pips over a 101.2 risk to reward. What happens next? We got stopped at a break even. Cool. Now we have these major highs that we're focusing on. We have the New York session highs over here, and then we also have the Asian session highs over here around the 3,500, and then we also have the 34.93. Very simple. If price action is respecting all of this key level, all we simply is doing is just trading with the trend. So we're bouncing off from major demand. We're bouncing off from this entire inverse. We're broke above this entire London session highs, which price action is respecting. Now we simply wait for is for the New York session to get broken out and then the Asian session to get broken out. And that's exactly what we did. We waited for this first entry confirmation, which was this New York session candle. We broke out of this entire New York session open highs. Clean. What do we wait for next? We have another zone. Notice how this zone over here is kind of like a range zone. So bouncing from point A to point B. So obviously we do not want to be trading inside of a range, right? We did close above the New York session highs, but we did close in the middle of this entire ranges. So the idea here is to wait for the breakout. And that's exactly what we did. For our third trade of the day or the fourth trade of the day, we simply waited for price action to break above it. Our entry was going to be above this entire candle wick. We entered this trade. We did end up hitting take profit 2. We got stopped at a break even. This was the last trade that we took right now. So we got stopped at a break even. Look where price is at right now, 35.12. So we were right with all of this trade that we took today. Obviously the volatility of today was very high, so obviously we got stopped at a break even very quickly, but we did secured every profit that we needed to. So we did end up closing out a 1 and 2 here. We lost 1. We closed this one, another 1 and 1.3, and then this one over here we closed out at another 1 and 1. So we're like averaging probably like around a 1 and 2.9, almost a 1 and 3 day, which is solid. But this was the pretty much every single trade that we took this morning. You guys can see how, again, whenever price action is reacting off, these major zones, it doesn't necessarily mean that you need to enter a buy position or a sell position right away. Just because we're seeing those short-term sellers, you still got to look at it from a higher time frame perspective. We go here into the 1 hour time frame. Notice how the 1 hour has never broken out of these entire lows. These lows over here are still considered as higher lows, right? So notice how it's being respected. So there's no point for us to be looking for sells if price action is still trading above those highs. So that's pretty much it, guys, of the trade that we took this morning. With very, very nice day. I love this setup. The last setup that I took, I really loved it, but took us out of break even. So it is what it is. But we'll be back tomorrow. Hope you guys enjoy, and I'll see you guys in the next one.